Today I want to share about a topic that's really important, flash crashes, and I've not been involved in a flash crash before. I've not had the unlucky event of losing all my account in a flash crash, but I want to give you my opinions on things that I think can help you avoid the flash crashes in the future, and things that will save you from blowing up your accounts in a flash crash or being stuck where you have a big margin call and positions getting closed and you being stuck. So a lot of these tips are based on common sense. A lot of other tips are going to be based on my experience as well, things I learned over time in trading. So I hope you take notes and stay tuned. So let's go with these 5 tips on how to not lose money in a flash crash. First of all, I want to be able to explain for some people that might not be aware what a flash crash is. So a flash crash in the market, in any market, is when the price of a currency pair or anything else, stock, a futures, drops significantly quickly in a matter of a few minutes, and sometimes recovers, sometimes doesn't recover after that, but happens in a fraction of a second, like really quickly. So sometimes you will see this chart on different pairs where price drops quickly on like a 15-minute chart or even a 1-hour chart quickly and recovers a little bit or doesn't recover at all. And what happens is a lot of people are stepped out way beyond their stop loss. So even if you have a stop loss, your broker might not get you out at that price, might get you out a lot later. And that means that you can lose a big portion of your account with these kinds of flash crashes. Now these happen a lot more in recent years. Examples are JPUSD in October 2016. Example are USD JPY in 2019. And more recently, oil in March of 2020. So these are all events where I know a lot of traders reach out to me where they lost a bunch of their account on those trades, or maybe they lost their account. And the issue is that a lot of traders quit, and that's not good. So here are the 5 tips based on common sense and my own experience about avoiding flash crashes and not losing your whole account on a flash crash. The first one is, and this is really important, to not put all your money into one account. I used to believe in the fact that to be a good trader I would have to put all my savings into one account, like one broker account, or even like a few brokers account, and then trade with those and make a bunch of money with those accounts. And that works fine until it doesn't, based on the fact that it might work really well and you might be making a lot of money and really good return. But then when something happens like that, a flash crash, you lose a bunch of your account, and then all that money you have in your account can be lost, or a big portion of it. So you could of course risk a lot lower in your trades, which we'll talk about later, but ideally you don't want to put all your money into one account. You want to have different accounts with different brokers, or you might have one account where you trade your money and then the rest of your saving in a different account, a bank account, something safe where you have good returns, but not in the market. So if you have to pull money from your bank account to put in the market, you can do it of course, as always. But you don't want to put all your savings to one broker account. This is just common sense because brokers close doors sometimes. They might not be able to refund you money if something happens bad to them. Or just because of the fact that there might be a flash crash. Or you don't want to have all your money there. You want to be able to use it for something else, but put it in trading when you need it to put in trading. So a good rule of thumb is if you have like $100,000 to put in your account to trade with, put maybe like a quarter of that in your account. And then add more if you need to. You can increase your risk a little bit to be able to fill that bigger capital you have, but you don't want to put all of it into one account, that's for sure. The second way to not lose too much money in a flash crash is to use a portfolio approach to trading. And by that I mean, a lot of traders, they just trade the market, they trade one pair at a time, 2 pairs at a time, or a few pairs, and that's it. But very few people have a portfolio of things that they trade. So maybe they have a lot of money in Forex, but they might also have an investment like stock or futures, or they have bonds on the side. And all that portfolio together makes it that if one part loses money, like their force loses money because of a flash crash, then the rest is not affected and they can recover the losses with the rest of the returns on our investment. So that could just be trading different market if you want, or it could be having an approach where, for example, like me, I trade Forex, but I also invest in stocks for longer term. I have a few ETFs that I hold for like the long term that I don't touch at all. And those, they might not be giving a really big return, but they're there to kind of supplement the Forex income. And they're there to be really hands-off where I don't have to do anything and I still make money on those investments. And if I want to trade more, I can take money from those to trade with it and put into a Forex account. But I'm not going to do it like all the time just for fun. Okay, it's there to be able to be a safe investment. And if something happens where I get sick or something, or I don't want to trade for at all anymore or something of the sort, which I don't think would happen at all, but I still have this money there hands-off doing returns on a monthly basis, which is still pretty good. And doing that really makes it easy to not lose all your money in a flash crash, of course. Now the third aspect of this is this really shows us that there's a big need for low risk trades. And you can see this like kind of like an insurance, where you buy an insurance not to get sick, or you buy an insurance for a car because you don't want to get an accident, or if you get an accident you want to be able to be safe and not have to pay everything out of your pocket. Same thing goes with trading. So most people say, oh, like no need for insurance, I'm just gonna trade high risk, and if things go up, it's fine, I don't care. But these people say this because they never experienced the bad side of it. They never experienced being in a flash crash, or they never experienced being stuck where they lose all their money in one trade. If you experienced that before, you know that there's a need for low risk trades where you use a small portion of your capital, really tiny, 1% maximum. Not because you don't want to make high return, but because you want to protect yourself against things that could happen with a high risk. First, you don't want to blow up your account, of course, but also you don't want to be stuck in a high risk trade on a flash crash. And of course, most people still think that a flash crash cannot happen to them, but they will be surprised when things go wrong. And that's why you want to protect yourself, like buying an insurance, before things happen and things go bad, of course. Now, there could be something to say here about also trading a higher time frame. I'm not saying this is a trade that's going to help a lot against flash crashes, but I do believe that trading a higher time frame helps compared to lower time frame. Just think about the fact that, and we'll pull it up on the screen right now, think about the fact that a flash crash that's big on a 1 hour chart might not be that big on a bigger time frame. And you might be lucky where if you trade a higher time frame like me, let's say 4 hour chart, daily chart, weekly chart, that could be helping you not being stuck in a flash crash and not losing all your account on one trade. Again, this is probably not the perfect solution because of the fact that I think flash crashes will happen later on bigger time frame over time. As more robots come in, as more algos come in, as more traders come in also, it could be affecting more of the market. But in general, that could be a way to deal with it temporarily, of course. Lastly, I looked into a few of those flash crashes. In fact, I got it here just at the back of my screen. And I was looking at different flash crashes in the past and different ways the market crashed and everything. And I've never seen my setup happier in those markets. So that means that if you have enough confluence, you're likely to be stuck in a flash crash. And that means you have to keep your confluence really strong at all times. You might be tempted to take a trade quickly because not all your rules are there on the market and you just want to make money quickly. And that only gets you so far. And for sure, you cannot expect to stay away from flash crashes that way. If you are serious about trading and being able to stay in trading for the long term, you gotta be staying disciplined on your rules anyway. And that means that confidence needs to stay high. So I'm not saying there was no reason to enter these trades on flash crashes. I'm saying that if you have enough confidence and different factors look into your trades, not just like one rule or one factor, you're likely to be able to stay away from these flash crashes in the future. And that just goes with having a proper strategy. You've practiced it before. Maybe you study these flash crashes yourself. You look into the chart, what happened there. Is it all the same? It's pretty similar for these crashes that happened before. You have to do, of course, your due diligence to be able to learn what happened then. And that's how you get prepared for next time. So I hope that makes sense. Leave me your thoughts in the comment section below. I want to hear your comments about these flash crashes, what happened, if you've ever been in one, how do you overcome that, and how you plan to overcome the next flash crashes, which of course will come inevitably. Also, please subscribe to this channel if it's not done yet. I publish a video like this almost every single day. I want to make sure you're getting the most resources, the most value to be able to become a better trader and achieve your goal of freedom and trading full time. And I really want to be able to have a positive impact on more traders. So if you subscribe, that really helps me and also helps you to get notified of future videos. And with that being said, I'll catch you back here pretty soon for the next video. Ciao.